Hey, it's Michael Saul, but everybody calls me Tiny. This video is Overbought and an uptrend plus updates and one new stock to watch. This is for the week of July 24th, 2017. If you would like to receive intra-week updates from me, go to www.attackthemarkets.com, fill in your first name and best email address, hit the Join the List button, and then go to the email you used to sign up. Check it for a link that you're going to be sent. You have to click that link in order to confirm that you actually want to receive communication from me. Okay? You'll get any updates on new videos, any breaking news or analysis that I have. And all right, let's take a look at the market and talk about that overbought condition I mentioned in the title. So we have been going up, for longer than this, but let's just start 2016. This beautiful W bottom, and then we come up, we take some pullbacks, we take some pullbacks, we take some pullbacks, but we keep going, we keep going, we keep going. So on the intermediate term, even on the longer term, we're overbought. Fine, great. However, you can get destroyed trying to short an overbought market in an uptrend. All right, it's not a sell signal in and of itself. However, when we do get overbought, and there are many ways to see that overbought condition in the market, whether it's just price action, whether you want to use an oscillator like I'm doing here, which I'll talk about in a second, whatever you want to do, there are ways to see if we are overbought or oversold. What you want to do when at all possible is look to buy oversold or buy divergences in an uptrend. That's what you're looking to do. Shorting overbought, not a real good strategy unless you want to get cracked. Here's the stochastic oscillator. I set it for 1463. Doesn't matter what your parameters are, just make sure you stay consistent, okay? Because if you're going to take signals off of one, don't use another one the next day and then go away, because you're just going to drive yourself crazy. So 1463 is what I use. Sometimes I use 533, sometimes I use 833. It doesn't matter. Just want to stay consistent. And right now, I'm in the 1463 kind of deal. So that's what I'm looking at, okay? All right, great. So we see here that we are overbought. Why? Because we are above 80. We're actually above 85. We're even above 90. That in and of itself, again, is not a sell signal. Look what happened the last time we were up here. Oh, we went higher before we pulled back. Oh, what about here? Oh, boy, let's short up here. Nope. Yeah, eventually we went lower, but of course, eventually we're going to get a pullback. That's how the market works. It's mean reverting. But in the meantime, you got to take this heat. Are you going to be able to take this heat, or are you going to stop out? You're going to move on? How about back here? Okay, back here maybe a little bit better. Oh, no, okay, nope. A little bit of a pullback, and then boom. And then again, sideways, and then we kept moving. All right, so I'm pointing this out to say that just because we're overbought, and I'm reading it all over the place, it doesn't necessarily mean we're going to get a deep pullback or a correction or a new bear market, whatever you want to call it. Can we get a retracement from here? Yes, but it doesn't. It's not because the stochastics are up here. All right, and I'm a little bit passionate about this today because I received an email about it and talking to me about, they don't understand how the market's going like this with the stochastic pegged at whatever, and they had a different setting, and it's fine. Like I said, it's okay. And I'm like, that doesn't matter. The tail doesn't wag the dog. All right, the stochastic is made up. I don't know I used to know the formula, but you can look it up. But it's based on the range and which way price is moving, etc. So, it's based on price, not the other way around. The market doesn't move because of the stochastic. The stochastic sets up because of how the market's moving. All right, so we are overbought. We are stretched from the mean, and the market likes to revert back to the mean, although we've seen it gone a while without doing that, okay? We've seen it stretch without doing it. So I'm looking on the short term for us to try to push a bit higher. I still think we can go to 250. However, I do believe a pullback is in the works because we are stretched again. You could see what we do. Sometimes we get elongated, but usually we're popping up and pulling back and popping up and pulling back and popping up here. Now, if we want to do a measured move based on symmetry, okay, and we like look at something like this, and then we copy it. Where are you? Create parallel line. Thank you very much. And then we go to here, and we have a little bit more to go until, I don't know how to squish this up, but you can see that we can head up to that 250 number if this push is going to be equal to this push. Now remember, this doesn't have to be the case, right? Obviously, this push is a lot longer than this last one. Okay, so this didn't equal this one. So symmetry is nice to look at, and it's nice to have a framework, but you got to look at price action. For me, the point of all this talking that I've just been doing for 6 minutes is I do not believe we have a sell signal here. I think that we are looking a little tired. I still think we can get a pullback before the summer's over, but hey, we only got about 5 weeks left in the 6 weeks left in the summer. All right, so my summer pullback prediction looks like it's not panning out so well here. All right, but again, continuing to move up. So if there's not a sell signal, is it a buy signal? Yeah, probably not an overall broad market buy signal because we're stretched here, but it is time to, if you're long, to adjust stops, as I've been saying, and there are still stocks setting up. So maybe not broad market, just buy everything, right? The rising tide, lifts all ships, but to look for like the hidden gems, like one I'm going to show you later. I don't know if it's going to go anywhere, but it looks like it possibly, has some. Possibly has some possibility. How about that? To try to push higher here. So that's in a couple of minutes. All right. So here's the S&P 500. Here's the Russell. Finally, and the reason I want to show this is it finally broke out, but it didn't go with an umph. It broke out of this channel that it's been surfing for months, and then boom, came back. So what's it going to do? Just continue to chop it out, maybe extend this channel a little bit? Yeah, possibly. Here's the mid caps have not broken. I mean, this channel isn't a great one because it's only really connecting. It's only has 1 point. But if we move the second point here, yes, I have to kind of adjust this. All right, so you can see here it's banging up against it. Maybe this will get a breakout. Again, not a sell signal, but it's not in a rush to get some big expansion here. Again, if you were long back here and you're continuing to move your stops as it moves, okay, I mean, that's working out. All right, it's not that big of a pullback so far off of the new highs. Dow looks like the S&P for all intents and purposes. And here is the NASDAQ, which has made a great recovery. And I spoke about this a couple of weeks ago, how I was not counting the NASDAQ out. And you could see what happened. The NASDAQ got oversold in an uptrend. And then boom. Now, it doesn't always look as beautiful as this. All right, so don't everybody rush out now and, oh, the 14.6, the 14.63. It doesn't always look as beautiful as that. Okay, but this was a perfect example of buying oversold in an uptrend. Now it's overbought. Again, is it a short signal? No, but it is time to trail stops and perhaps not enter long until we get a sideways consolidation or pullback. All right, let's go through some sectors. Here's the semiconductors lagging a little bit. Okay, already overbought, but lagging here. Will it make it to the high? Is this a divergence? NASDAQ at the high, SOX not at the high. Something to pay attention to there. Clad tanker, a little struggle there at the 50-day moving average. Here's ADI. Looks like it wants to head to the 200-day again. Here's Intel. It hasn't even gotten back to the 50-day. NVIDIA, nice and strong. All right, but this looks more like a wedge. Notice how the candles are getting smaller here, so there's not a lot of upside momentum there. Let's look at the banks. The banks was looking at the financials, if y'all remember. If not, you can just take a look back at a couple weeks ago, I believe, or maybe even last week. But you can see the banks, they look like they were ready to go. Instead, they've kind of just floated along here. So, this never got its trigger here. But again, I was looking for the banks to go higher, try to retest that 100 level. But no, watch the 50-day moving average. If it continues to pull back, here's Bank of America sitting on the 50-day moving average. Here's JP Morgan sitting on its 20 EMA. Here's Citigroup. Yeah, the Citigroup was one of the relative strength leaders. So was Bank of New York. Now, Bank of New York hit a new high before reversing here. But again, we got to pay attention here because I expected the banks to try to pop. Look at Goldman. Goldman below its 200-day moving average. Last time it only stayed there for a little bit. But if we're drawing this in here, this little channel here, it's underneath here as well. So it poked it, but looks like it closed right on it. So is this the start of a deeper pullback for Goldman? And will Goldman go down to the 180 level? Okay, which is next key support from where this breakout happened. How about like a Morgan? Hit the high and then kind of flaked out, reversed up there. We got like a leg Mason. How about the biotechs? So let's talk about some updates. So the biotechs popped up to a new high here. And it's a relative high. It's obviously not a new all-time high. And I want to see if the biotechs can get something going here because they're pretty overbought. Now, if you notice, you're not seeing the stochastics up above 80 or 85 or 90. I mean, it's at 69. So it's not even officially, quote-unquote, overbought. And maybe that's telling us, hey, it has a little bit more to go. But to me, why I'm thinking it's overbought is we popped up, we consolidated, now we popped up again to a new high. So this may have some more legs to it, but I would be extremely cautious here. If you are long the biotechs, make sure you're managing it. Here's Labu. Okay, there's XBI we talked about. How about Sangamo? So Sangamo spent last week pulling back. Still looks okay, but it's not as strong as it was, obviously, the week before coming out of that consolidation. Look at this IMGN, who I was looking at for a potential push high and never triggered, right? You got 1, 2, 3, 4, all 5 days were down and never took out the previous day's high, so that's okay, right? There's no trigger, but you see, pulled back to the 50-day moving average. Will it hold here, or will it continue to go down back to this flag breakout down at 476? Here's Baxter International. That hit a high, so that's good. I think we went through everything we were looking at. Oh, Akami. Yeah, Kami did not trigger. Kami instead went the other way, still trying to fill this out here. Not doing much. Still doesn't look strong, so let's see if this can roll over as well. Look at a couple of other groups. Let's look at gold. So gold got over the 50-day moving average, and GDX right between the 50 and the 200. Again, like my friend Mike Swanson says, people get interested in the miners when the GDX gets above 24. Oil, interesting, because I just read a article today about OPEC. Let me try to bring it in here. Okay, so Libya, Nigeria oil output caps are said to be ruled out for now, right? Because limiting oil output from Nigeria and Libya won't be in the agenda when OPEC and other producers meet on Monday. Both African nations saying they'll need to keep pumping at a higher level before they can join a global effort to stem a supply gut. Aha! So let's see what oil does off of this news. As of the end of last week, it looked like this flag here, this bear flag, was starting to resolve and go down. Remember, I still believe it's going to take out the 2016 lows, but we'll see what this supply glut news leads for it. Here's the bonds. Still nothing really to speak of here. Getting the bounce off the 200-day moving average area, but not really in a rush to move. Let's look at some big stocks. I sometimes tend to forget that. I always get reminded with an email or two. So here's Amazon. Looks like Amazon is nice and strong. They want to go up to new highs here, up at the 1050 level. Here's Apple, sitting on its 50-day moving average here. See what it wants to do. Here's Netflix. Popped up really nice last week, and see if it could consolidate from here. How about Tesla? Everybody wants to know about Tesla. So this is a corrective type of move here in Tesla. So what I want to see is if this corrective type move leads to more downside. I can't call it a bear flag because it's above the 200-day moving average, and bear flags don't really exist in uptrends or sideways markets, which is the worst that you could probably call this. Okay. What else do we got? What else do we got here to look at? Tesla, Apple, Amazon, Alphabet. Yeah, in a consolidation here. See if it can get above 1,000 and actually stick above 1,000. Caterpillar, pull back in the hammer at the 50-day moving average. And then you got John Deere. It's consolidating here above rising moving averages as well. So, recap and then the new stock. Recap is we are overbought in an uptrend. It is not a sell signal, but it is a trail stops. Watch out for a pullback. May not be the greatest time to step in. However, you can look through the universe of stocks and find candidates. That's what I do for my private folks. And that's also why I'm only going to be looking at one stock a week new, because one of my private clients actually said to me, hey, you know, what's up? So I'm only going to really be talking about one stock a week. Of course, we'll do the recaps and stuff like that, and we'll go through the big names and all that. But anyway, so the stock this week is IPXL, Impacts Laboratories. That's interesting. It reports earnings on August 9th, so there's a couple of weeks left. Has in the spirit of an inverted head and shoulders, which means if we take the low here at 775 and we come up to the neckline, which even if you just use this, right, you got about 8 points, would bring it to the 22s. That's a minimum target for this if it can get going. And then if you use, depending on what you're going to use as the neckline, it could actually measure up to as much as the 27s here. So you have a nice little consolidation here. That's why I'm pointing this out. The inverted head and shoulders is one thing, and it may have already fired off, but this little pause here, I really, really like. Again, wait for confirmation. Wait for it to break out of this and move higher. All right, but this could be a nice one. Impacts Laboratories, IPXL. Tiny at attackthemarkets.com if you have any questions. Join the email list for intra-week updates. I will speak to you in next week's video if you don't join the list. But come on, why aren't you joining the list? Come on. Don't you want intra-week updates from me? All right, I will talk to you in the next video.